a very volatile movement in the Asia Pacific markets today due to Trump's stubborn reluctance to abide to the Supreme Court outcome, where the Supreme Court deemed that the 10% global reciprocal tariff that was introduced last year as illegal, and Trump rebutted that with a 50% tariff to be applied universally starting from today. The US stock market futures reacted negatively to this news flow, where the S&P 500 futures and the Nasdaq 100 futures are down by negative 0.7% to negative 0.9% as we are speaking right now in today's Asia session. But however, this negative feedback loop from the US stock market futures does not spill over to the Asia Pacific benchmark stock indices, where majority of them are still trading in the green. Gold XAU/USD spike up by 1.15% today, and is now probing the key short-term pivotal resistance of $5,170 per ounce. The US dollar weakened today, led by a strengthening of the Japanese yen, which managed to rise by 0.5%. Very good morning to all, and welcome back to today's Daily Dose of Market Insights. My apologies, you're not able to see me today because there's some kind of technical issue with my webcam. So we will actually progress as usual. So before we start, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, give me 1 minute just to make sure that everything is okay. Okay. All right, I think it should be fine. All right. Okay, this will be the disclaimer. Just to show for, but just now the screen is kind of frozen. Okay, good. So basically, last week and this opening Asia session, key risk event to take note of will be Trump's defiance to actually go against the U.S. Supreme Court verdict, where the Supreme Court deemed the last year reciprocal tariff as illegal. All right, so this is the trade. This is the flow that I want to share with you guys over here. All right. Okay, so basically what Trump did over here is that he decided to increase the reciprocal tariff to 5 percentage point higher to 15%, and it will be applicable as soon as today. And the thing over here is that this particular 15% is a bit complicated on how he wanted to actually implement, because he's actually using this particular 1977 act over here. Let me scroll down. All right, yes, this is the one. All right, so he's using this news baseline tariff, which is the just announced 15% over the weekend, under Section 122 of the 1974 Trade Act. All right, so this under Section 122 of 1974 Trade Act allows the president to impose tariff for only 150 days. So that's about what, around 4.5 months plus, without congressional approval. So beyond 150 days, he may find it challenging to seek approval from Congress, because at this point in time, some Democrats, and as well as the Democrats can for sure, and some Republicans have opposed elements of his ongoing aggressive trade policy. So there's a lot of fluid situation going on or uncertainty regarding about this trade tariffs policy. And given the fact that Trump's defiance to go against the US Supreme Court verdict, that will actually potentially lead on to a much more uncertainty surrounding the policy that is coming out from the US administration. So the first instance over here, what we could see is a dollar sell-off in today's Asia session. So if you look at the 5-day rolling performance of the US dollar against major currency, as of we are speaking right now, the dollar is actually weakening since last Friday. And if you look at from the 1-day rolling performance, the weakest is against the Japanese yen and the Swiss franc. Both the dollar is down by negative 0.4% against the Swiss franc and the Japanese yen. And what's interesting over here is that if you look at the technical chart of the US dollar index, we see another bearish reaction again right at the 50-day moving average, which is at 98.05. So this bearish reaction was first seen during 5th of February, which is the earlier part of this month, and it happened again on last Friday. And we do have a negative price reaction on Monday by shaping this bearish candlestick as we are speaking right now, where the dollar index is down by negative 0.32%. And over to the US stock market. So on last Friday, where we see the US Supreme Court verdict ruling Trump's global reciprocal tariff of the baseline of 10% that was imposed last year as illegal, we see a positive performance in the US stock market, because given the fact that we know that tariffs increases the cost of doing business for US companies. So that was actually a positive news flow for the bulk of the majority of the US stock indices, where 3 of them closed in the green. The SPX up by 0.69%, the Nasdaq 100 up 0.87%, the Dow Jones Industrial Average up 0.47%, and the Russell 2000 closed almost unchanged on last Friday. But however, due to this uncertainty regarding about the new way of Trump decided to skirt around this US Supreme Court verdict, the Nasdaq 100 E-mini futures and as well as the S&P E-mini futures are reacting negatively in today's Asia session. So both of them are down by negative 0.84%. The higher beta Nasdaq 100 underperformed, and the S&P E-mini futures, as we are speaking right now, is down by negative 0.7%. So the net overall impact over here is that it seems to us that market participants are now reviving the narrative of sell America, buy back the rest of the world. So what we could see is the majority of the Asia Pacific stock market majority are in the green, except for the Nikkei 225, which is down by negative 1.2% as we are speaking right now. However, the Hang Seng in the indices or the Hang Seng index is trading near the session high as we are speaking, up by 2.33%. The higher beta Hang Seng Tech Index, which comprises of the China big tech stock, is up by 3.34%. The China A50 indices is closed for a public holiday today. It's not open due to the Lunar New Year break. But if you look at the other Asia Pacific benchmark indices, the KOSPI is up by 1%. The ASX 200 is down by negative 0.54%, and the STI is up by 0.3% as it's managed to trade above the psychological 5,000 level again. So net overall impact for Asia Pacific benchmark stock indices, it seems to us that it's much more trading in the positive territory for most of them rather than a negative territory, except for the intraday underperformance of the ASX 200 and the Nikkei 225 as we are speaking right now, as both of them are trading in intraday losses. So like I explained, what we are seeing right now is the narrative of kind of a sell America by the rest of the world, and as well as having a bullish stance on the precious metal, which is being used as a hedge for the dollar debasement narrative. All right, so this is the kind of key highlights that I want to share with you guys for the first segment of the daily dose. So now let me move on to the second segment of the daily dose, which will be the new latest intraday update after taking into account what has taken shape in the last 3 trading sessions after we went for our CNY break. So with that, let me expand my screen. So hopefully the screen is being expanded. All right. So let me now start with the FX market first. All right, over here. Okay. So let us start with the euro dollar. Okay. Okay. So this will be the euro dollar. So the euro dollar did a bullish reversal after a challenge of the 50-day moving average on last Friday. It did a bullish reversal over here. So with this bullish reversal, it also came with a bullish divergence that is being seen on the RSI hourly, the hourly RSI that's being flashed out on a Friday European session. So with that, I will be watching two key support level for today, given the fact that it's still trading below the 20-day moving average. So the first support I'm looking out for will be the very close to the US session last hour closing a low over here, which is at 117.76. We so now very close to the 50-day moving average. Pivotal support level will be last Thursday and last Friday European session minor swing low area at 117.40, 117.28 over here. So do have a bullish bias for today on the euro dollar. So to increase the odds of this bullish bias, the euro dollar got to have a breakout above 118.60, which is my key intermediate resistance level for today, which is the 20-day moving average, I think as a key intermediate resistance level as well. So a clearance above 118.60 may open up scope for the next intermediate resistance to come in at 119.27, which is the minor swing high of 10 of February and 11 of February. Only a bearish breakdown and an hourly close below 117.28 will invalidate this bullish intraday recovery bias scenario to see a further slide towards 116.73, maximum 116.32, which confluence with very closely the 200-day moving average, as well as the minor congestion area of 19th of January and 20th of January. So I only able to tighten my pivotal support today at 117.76, which is right exactly around the 50-day moving average, unless we have a clearance and the hourly close above the 20-day moving average at 118.60. Right, so that's for the euro dollar. Next will be the sterling dollar, which is the cable versus the USD. So the sterling dollar also managed to do a recovery right after the retest at the key 200-day moving average, very similar to what we see previously on 21st of January and 22nd of January. And what we could see over here is that during the retest of the 200-day moving average, that was on Friday at Asia session, 10 a.m., we do see a bullish divergence that's being flashed out as well. So with that, pivotal support for sure will be around the 200-day moving average, and as well as last Friday and Thursday minor swing low area 134.55 slash 134.34 or over here 134.55 slash 134.34. So with that, we'll still maintain, we will do have this mild bullish recovery scenario on the sterling dollar for today, with the first resistance to look out for at 135.88, followed by 136.67, just slightly below the 20-day moving average, right, at 136.67. Only a bearish breakdown and the hourly close below 134.34 that would invalidate today's mild bullish recovery scenario to expose further weakness towards 134 figure level, maximum 133.48, which is the key minor swing low of 18th of December last year and 19th of January this year. That will be at 133.48. All right, so next up will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar also managed to find support right exactly at the retest of the 20-day moving average, which is still rising on last Friday Asia session over here. And what we continue to see is that the hourly RSI also managed to flash out a bullish divergence as well. So with that, two key support level to look out for today will be the earlier bullish breakout that was seen on the US session on last Friday at 11 p.m. hour mark Singapore time. That's a pullback support at around 70.57. So for sure, using last Friday Asia session bullish reversal low, which is around the 20-day moving average at 70.35, 70.20, which will be right exactly at the bullish reversal low that is being printed out on 20th of February at the 10 a.m. Singapore time hourly mark. So 70.35, 70.20 will be my short-term pivotal support for today to have a potential bullish recovery scenario that is still in play potentially for the Aussie dollar. First resistance level to watch will be the stubborn 71.40 resistance level, where it tested 3 times on the 12th of February and as well 12th of February, 11th of February, 12th of February, and as well as 13th of February at 71.40, indeed making it a kind of a key intermediate resistance for the bulls to actually surpass, to gain more traction, to expose the next intermediate resistance in the next step at 71.75 next. However, if you see a price action breakdown and hourly close below 70.20, that would invalidate the recovery scenario and see a further extension of this ongoing minor corrective decline sequence, exposing the next near-term support level at 69.80. Failure to hold above 69.80 may see further weakness back towards the 6th of February bullish reversal low at 69.07, 68.90, which also correspond very closely to the previous minor swing low area of 27th of January as well. Right over here, 27th of January. All right, so that will be the Aussie dollar. Next will be the dollar yen over here. So the dollar yen did a bearish reversal right below the 50-day moving average on last Friday European session, and it actually reintegrate back below the 20-day moving average again, so making it the previous breakout on 19th of February as a failure bullish breakout. So using this reintegration line, which is also correspond to the 20-day moving average, so I put a bit of excess over here. All right, so over here. All right, given the start of today's Asia session high at 154.95. Okay, so let me slash it. Okay, so 154.65, 154.95 will be my short-term pivotal resistance on the dollar yen for today. Potentially a breakdown below 153.83 may expose further weakness towards the key swing low area on 12th of February and 17th of February, and as well as 28th of January at 159.65 / 152.20 over here. All right, so if for sure, if we see a breakdown below 152.20, then we will see another round of down leg for the dollar yen to expose 151.20 next. All right, in the very shorter term, which is the minor congestion area of 13th of October and 20th of October previously over here. Right, so what we could see is that the land in the sand will be 153.83 for the best to actually open up scope further weakness if we have a bearish breakdown and hourly close below it. And in order to maintain this ongoing bearish tone that is being we call it surface during the start of today's Asia session, with the reintegration back below the 20-day moving average, will be at our pivotal resistance level at 154.65 / 154.95. However, a pierce up above 154.95 will invalidate today's bearish bias to see a squeeze up to retest last Friday's swing high at 155.66. A breakout above 155.66 will see a further extension towards 156.36 next. So that's for the dollar yen. All right, now let us now proceed to the intraday technical outlook on the major stock indices, starting with the Asia Pacific one, which is the Hong Kong 33, representing the Hang Seng Index. So the Hong Kong 33, previously we do have a neutrality range before we went for our CNY break, which is at 26,905. And the lower limit of that neutrality range will be on the 13th of Friday, which is the previous Friday swing low area that also managed to form a range support since 6th of February, now at 26,285. So in today's Asia session, it managed to do a bullish breakout above the upper limit of the range at 26,905, and also reintegrate back above the 20-day moving average, and now doing a intraday pullback as we are speaking right now at 11:27 a.m. Singapore time. So with that, I'll be using last Friday US session low, which is at 1 a.m. Singapore time. That is early Saturday. Then that will be at 26,615 over here, and also correspond to that hourly bullish hammer candlestick low as well, that is being printed on 21st of February, Saturday, 1 a.m. Singapore time. So using 26,615, so that will be my short-term pivotal support for today. Flip to a mild bullish bias on the Hong Kong 33 CFD index that is representing the Hang Seng Index. intermediate resistance level to watch before the major resistance of 27,500 will be this mild congestion area over here that has formed on 11th of February and 12th of February, which is also very close to today's intraday high, which is at 27,157. That will be at 27,228 over here. So let's put it in writing, 27,228. So 27,228 will be my first resistance level to watch. A clearance above 27,228 may potentially see a retest at this key major resistance level of 27,500. Only a bearish breakdown and an hourly close below 26,615 will totally negate this bullish bias and see a retest again on this sideways range configuration bottom, a minor one since the low of 6th of February at 26,285 next. So that's for the Hong Kong 33. Next will be the Japan 225. So the Japan 225 managed to trade in this sideways range configuration that has been in play since the high of 10th of February. All right, so this kind of choppy sideways range configuration. So what's interesting over here is that the RSI is now coming very close to the oversold level again. But given the fact that it can't break out above 57,934, so that will be seems to us that there will be a lack of bullish momentum unless 57,934 is taken out on the upside over here, which is so very correspond to very closely to the minus swing high of 16th of February and 19th of February last week, where it failed to actually gain any bullish trajectory before trading in this choppy sideways range configuration. So for today's intraday level, we will have a neutrality range. So neutrality range will be at the lower limit at 56,096, pardon me, 56,096. Upper limit of the neutrality range will be last Friday US session high at 57,290 for now, right? So that's for the Japan 225. Switching to a neutrality range bias for today. Next will be the Germany 30 that representing the German DAX over here. So the German DAX managed to hit our resistance level, the first resistance level at 25,225, 25,330, which was last Wednesday minus swing high. That was tested again on last Friday at the 11 p.m. Singapore hourly mark before shaping that pullback and this today's gap down during the Asia session, but still continues to trade above this 20-day moving average and also above the upper limit of this ongoing minor ascending channel that has been in place since the minor swing low of 6th of February. So with that, I will have adjusted pivotal support to confluence with the lower limit of this ongoing minor ascending channel, which also coincide with the last Thursday swing low area at 24,985. So using 24,985 as my adjusted pivotal support level on the Germany 30, first resistance level to watch will be 25,225, 25,330. A breakout above 25,330 may see a retest at the current all-time high area of 13th of January this year at 25,505 next. Only a bearish breakdown below 24,985 may see a slide to probe the 20-day moving average at 24,847, which is also coming very close to the 50-day moving average as well. A breakdown below 24,847 may see further weakness to expose the next near-term support level at 24,610, which is this congestion area here of 5th of February and 6th of February, and also confluence with a Fibo retracement level of the golden ratio of 61.8%, taking into account of this ongoing recovery from the low of 6th of February to last Friday, 20th of February, US session high. Right, so that's for the Germany 30. Next will be the US stock indices over here. So the US stock indices, no change. The US Wall Street 30 starting firstly will be representing the Dow Jones Industrial Average, going to trade in the minus directional movement in this tight sideways range, holding the pivotal support level at 49,265. That has been tested several times on 13th of February, 17th of February, and as well as last Friday, 20th of February. So watching very closely this 49,265 as my short-term pivotal support level, having a mild bullish recovery for it to go back up towards the top of the range again, with this Asia session high over here. Okay, close this level here. Give me a minute. Yeah, so corresponding very closely to today's Asia session high. Today's Asia session high will be at, okay, not Asia, yesterday's, the previous 20th of February US session high was at 49,668. So very closely to this minor swing high of 49,707 over here. You can see on my screen. Okay, so this will be the first resistance level for it to watch for today, 49,707, followed by the range top of 49,940. All right, over here. However, if a price action breakdown below 49,265 and the hourly close below this level, then potentially this recovery back towards the top of the range will be invalidated to see potential short-term weakness to expose the next near-term support level at 48,900, 48,710 for the US Wall Street 30 that is representing the Dow Jones Industrial Average. Next will be the SPX 500. So the SPX 500, before we went for our COI break, we highlighted that the first resistance zone to look out for will be 6,916, 6,932, which indeed it tested on last Friday before we see today's intraday Asia session sell-off. So two key support level to watch out for today. The first support level will be last Friday US session low that has managed to survive since the start of the Asia session on last Friday itself at 6,836. Pivotal support remains the same at 6,797 for potentially to see a reversion back towards the top of the range resistance again at 6,916, 6,932. So it's more like a bullish a bias within this range configuration, given now it's coming down towards the bottom of the range. Only a bullish breakout above 6,932 may potentially seize the boost to gain a better traction to retest the current all-time high area at 7,005, 7,014 in the first step. However, if we see a bearish breakdown below 6,797, that would invalidate the bullish reversion, mean reversion scenario to revisit the upper limit of the range to see further weakness towards 6,679 potentially. A breakdown below 6,679 may expose the medium-term pivotal support zone at 6,733, 6,720, which is the minor swing low area of 6th of February, and as well as the congestion area here of 25th of November. Right, so this will be the SPX 500. Very similar for the Nasdaq 100 as well, as it hit our first resistance level and it did a breakout on last Friday, which is at 25,084 before doing that sell off as we are speaking right now. So pivotal support that we have before we went for our COI break will be at 24,580. So that will be remains the same as we see the price action almost tested it on last Friday before shaping that mild bullish reversal on last Friday itself. So using 24,580 as my short-term pivotal support level on the Nasdaq 100, maintaining a mild bullish bias to remain for a potential mean reversion back to retest this minor range resistance that has been in place since last Thursday at 25,084. Only a bullish breakout above 25,084, pardon me, is 25,084. So only a bullish breakout above this minor range resistance level at 25,084 may expose the next near-term resistance zone of 25,430, 25,580 next. However, if we see a bearish breakdown below 24,580, will invalidate this bullish mean reversion towards the upper limit of the range to see further weakness towards 24,333, maximum 24,140. Currently, our medium-term pivotal support level, which is also confluence with the key 200-day moving average. All right, so that's for the Nasdaq 100, and so wrap up all the intraday trend bias key levels to watch for the major stock indices. So let us now take a look at the commodities market over here, starting with gold XAU/USD. So gold XAU/USD spike up in today's Asia session due to that uncertainty surrounding the US defiance trade policy that Trump still wants to embark, despite the fact that the Supreme Court has ruled out or deemed his previous global reciprocal tariff of 10%, the base rate, as illegal. And that actually also see the gold as being a safe haven, and it also gaining popularity, where the US dollar debasement trade narrative also comes into play, where the weaker US dollar tends to lead to a stronger gold prices. So gold price now is probing our key short-term pivotal resistance that we previously highlighted at 5,170. So given this ongoing US dollar weakness that is still prevalent on the intraday basis, so for today I will have I will not have a bearish bias on gold. So given that it's still probing at the 5,170 short-term pivotal resistance that we have previously, I will flip to a neutrality stance for now for today for gold, watching these two key levels again. Two key levels for today, 5,170 and 4,960, which was last Thursday minor swing low. That's very close to the 20-day moving average. So in order for the boost to come back into play, hourly bullish breakout above 5,170 will see another round of momentum piling up, positive momentum piling up in gold XAU/USD, potentially retesting the minor swing high in first step of 30th of January at 5,448. Above it sees a retest of the current all-time high level that was printed on 29th of January before that sell-off took shape at 5,602. Before that drastic sell-off that took shape due to that deleveraging of overly crowded leverage position previously seen in January. Only a bearish breakdown below 4,960, so that also represent a reintegration back below the 20-day moving average. We'll see gold prices going back into that corrective decline / pullback phase again, exposing 4,842, followed by 4,703, which confluence with the 50-day moving average for now. All right, so that's for gold XAU/USD. Flipping to a neutrality stance, watching very closely 5,170, and on the downside 4,960. Next will be the West Texas crude oil. So the West Texas crude oil continues to bounce up as expected and hit our resistance level at 666.98 and 666.50 previously, before shaping a pullback during today's Asia session to retest the previous minor swing high area of Thursday and Wednesday, 11th February. Bullish breakout on last Thursday due to this ongoing very kind of a jittery relationship between Iran and US, where Trump continues to play hot and cold towards the relationship with Iran, threatening Iran to abide by US demand. And what we could see is that Trump last week ordered more US warships towards the Red Sea, which is surrounding Iran area, pressuring on Iran in this ongoing US-Iran negotiation talks. So that also causes the global risk, geopolitical risk premium to see an uptick last week. So that is actually shaping a positive feedback loop on the West Texas crude oil. So with that, we will have a adjusted upwards pivotal support for today at 63.92, which corresponds with the 20-day moving average, unless we have an hourly close above 66.98 and a bullish breakout above 66.98, which was last Friday a high. Then I would tighten my pivotal support to 65.61. So for now, using 63.92 adjusted upward short-term pivotal support on the West Texas oil to have a continuation of this intraday bullish bias for the next resistance to come in at 67.80, followed by 69.08/69.26, pardon me, which is a Fibo extension cluster level. And as well as if you go back in time for the graphical resistance, is at the congestion area of 30th of July and 1st of August last year. Only a bearish breakdown below 63.92 that would invalidate today's bullish bias view on West Texas oil to see it drifting downwards to retest the 200-day moving average again, which is confluencing with the minor swing low area of 6th of February and 18th of February at 62.38. All right, so that's for West Texas oil, still maintaining a bullish bias with an adjusted pivotal support at 63.92. All right, so that sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for this week itself over here? So this week economic calendar for the week of 20. Okay, so pardon me, I think it's not moving. Yeah, I'm not showing why it's showing last week data. Okay, never mind. Let me do it again. The calendar. Okay, let me refresh the calendar. Okay, let me flash it out this week. Not sure why it's showing last week. Okay, so this Monday, key data to look out for at the start of the European session, which is already started. Well, I'll say the first half of the European session will be at 5 p.m. Singapore time. The release of business sentiment data out from Germany. They call it the Info Business Climate for February. So consensus forecast expecting improvement business sentiment in Germany up slightly to 88.4 based on the consensus forecast. From the previous January print of 87.6. So that could potentially influence the euro dollar, the euro crosses, and as well as the Germany 30 CFD index over here. And after that will be a rather quiet session as the US session kickstart. So early Tuesday, 24th of February at 1:30 a.m. Singapore time, we have ECB President Lagarde speaking. So that could also potentially influence the euro dollar, the euro crosses, and in some form the Germany 30 CFD index. All right, so that will sum up today's Daily Dose of Market Insights. I'm Kelvin here, wishing you guys a great day ahead, and we shall speak again tomorrow. Thank you.